and welcome back to Bonis Life, your home for straight-up, no-nonsense analysis of the wild world of crypto. Today, we're diving deep into a question that's on everyone's mind. How in the world do you trade this market? Are we in a bull run, a bear market, or something else entirely? Well, you've come to the right place, because today, we're going to dissect the current market, identify exactly what kind of beast we're dealing with, and then, most importantly, I'm going to give you actionable strategies to trade it, whether you're a short-term scalper, a mid-term swing trader, or a long-term hodler. And trust me, you're going to want to stick around for this one because we've got some exclusive insights that you won't find anywhere else. We're talking real numbers, real data, and real strategies to help you navigate these choppy waters. So grab your coffee, get comfortable, and let's get into it. All right, let's start with the big picture. What are the numbers telling us right now on January 28th, 2026? Well, the global crypto market cap is sitting pretty at a hefty $3.127 trillion, up a respectable 2.2% in the last 24 hours. That's a lot of digital gold, my friends. The 24-hour trading volume is a solid $125.4 billion, which tells us there's still a lot of activity in the market. People are buying, people are selling, and the market is very much alive and kicking. Now let's talk about the king, Bitcoin. BTC is currently trading at $89,762, showing some decent strength with a 1.9% gain over the last 24 hours. But here's the thing, it's been a roller coaster. Just this past weekend, we saw Bitcoin dip to its 2026 low of around $86,000 before bouncing back. This tells us there's a battle raging between the bulls and the bears. And right now, the bulls are putting up a good fight, but they haven't won the war just yet. But what about the rest of the market? Ethereum is also showing some life, trading at $3,022, up 3.6% in the last 24 hours. And we're seeing some impressive gains in the altcoin market, with coins like Hyperliquid up 25% and Jito up 31% over the last few days. This suggests that there's still a healthy appetite for risk in the market, which is a good sign for traders looking to make some moves. Now, let's look at some of the more advanced metrics that the pros use. The Fear and Greed Index, which is a great indicator of market sentiment, is currently at 30, which is in the fear zone. Now, I know what you're thinking. Fear sounds bad, right? Wrong. This is actually a good thing for contrarian investors. As the old saying goes, be fearful when others are greedy, and greedy when others are fearful. A reading of 30 suggests that we might be getting close to a bottom, and that there could be some good buying opportunities on the horizon. Remember, the market is driven by emotion, and when fear is high, that's often when the smart money starts accumulating. Open interest, which is the total number of outstanding derivative contracts, is at a healthy $136.67 billion, up 2.57% in the last 24 hours. This tells us that there's a lot of money flowing into the derivatives market, which is a sign of increased speculation and volatility. And speaking of volatility, we've seen a lot of it lately. 24-hour liquidations are at $310.54 million, which means a lot of traders are getting wiped out. This is a good reminder to always use stop losses and manage your risk carefully. Don't be one of those statistics, my friends. Let me break down the liquidation data a bit more. Bitcoin alone saw $87.30 million in liquidations over the past 24 hours, while Ethereum saw an even higher $94.99 million. This tells us that the leverage in the market is still quite high, and traders are getting caught on the wrong side of these moves. The long-short ratio is sitting at 49.74% to 50.26%, which is almost perfectly balanced. This is another sign that the market is in a state of indecision, with neither the bulls nor the bears having a clear advantage. Now, let's talk about Bitcoin dominance. This metric tells us what percentage of the total crypto market caps is made up of Bitcoin. Right now, Bitcoin dominance is at 58.99%, which is quite high. This tells us that investors are seeking safety in the king of crypto rather than taking risks on altcoins. When Bitcoin dominance is high, it's often a sign that the market is in a risk-off mode, with investors preferring the relative safety of Bitcoin over the higher risk, higher reward altcoins. The altcoin season index is at 43, which is in the neutral zone. This means we're not in a full-blown altcoin season where altcoins are outperforming Bitcoin across the board, but we're also not in a Bitcoin-only market. It's somewhere in between, which again points to a market that's in a state of equilibrium. So what does all of this tell us? Well, it tells us that we're in a very interesting market. It's not a clear-cut bull market, and it's not a clear-cut bear market. It's something in between. And that, my friends, is what we're going to talk about next. So we've looked at the numbers, and it's clear that we're not in a simple, straightforward market. So what are we in? Well, based on all the data we've analyzed, I'm calling it a consolidation market or a range-bound market. And if you've been following my channel for a while, you know that I love these kinds of markets because they offer some of the best trading opportunities if you know what you're doing. What does a consolidation market mean? It means that the market is trading within a defined range with clear levels of support and resistance. We're not seeing the explosive parabolic moves of a bull market, and we're not seeing the soul-crushing drops of a bear market. Instead, we're seeing a lot of sideways price action with the market coiling up like a spring, getting ready for its next big move. And trust me, when that spring releases, you want to be on the right side of it. And the technicals back this up. If we look at the daily chart for Bitcoin, we can see that it's trading below its major moving averages, the 20, 50, 100, and 200-day moving averages. The 200-day simple moving average is sitting way up at $104,703, which tells us that on the longer time frame, we're still in a downtrend. The 50-day moving average is at $89,975, which is right around where we're trading now. This is a key level to watch. However, on the lower time frames, we're seeing some signs of strength. The RSI is hovering around 48, which is neutral. The MACD is showing a slight bearish signal at minus 621. But the momentum indicator is actually showing a buy signal. This all points to a market that's in a state of equilibrium, with neither the bulls nor the bears in full control. The average directional index, or ADX, is at 24, which indicates a weak trend. Anything below 25 is considered a weak or non-trending market, which confirms our thesis that we're in a consolidation phase. So, what are the key levels to watch? Well, we have a strong support zone for Bitcoin between $84,000 and $86,000. This is the level where we saw the price bounce over the weekend, and it's a level that has held up well in the past. According to the pivot point analysis, the first support level is at $82,656, with the second support at $77,816. On the upside, we have a key resistance level at $91,000. If Bitcoin can break above this level with conviction, it could be a sign that the bulls are back in control. The first resistance level, according to pivot points, is at $93,494, with the second resistance at $99,492. Now, I know what you're thinking. A range-bound market sounds boring, right? Wrong. A range-bound market can be a trader's paradise if you know how to play it. And that's exactly what we're going to talk about next. All right, this is the moment you've all been waiting for. How do you trade this consolidation market? Well, the good news is that there are strategies for every type of trader, from the fast-fingered scalper to the patient long-term investor. So let's break it down. For the short-term trader, the scalper, this market is your playground. The key is to play the range. That means buying at support and selling at resistance. For Bitcoin, that means looking for buying opportunities around the $84,000 to $86,000 level and taking profits around the $91,000 level. You can also use technical indicators like the RSI and the stochastic to help you identify overbought and oversold conditions. When the RSI is below 30, it's a sign that the market is oversold and due for a bounce. When it's above 70, it's a sign that the market is overbought and due for a pullback. The current stochastic reading is at 26, which is approaching oversold territory. This could be a signal that a short-term bounce is coming. But remember, this is a scalper's market, so you need to be quick and nimble. Don't get greedy. Take your profits when you have them, and don't be afraid to cut your losses if the trade goes against you. And always use a stop loss. In a volatile market like this, a stop loss is your best friend. I recommend setting your stop loss just below the support level, around $83,500, to give yourself some room for the natural volatility. For the midterm trader, the swing trader, you're looking for bigger moves. You're not interested in the small day-to-day fluctuations. You're looking for the next big swing. And in a consolidation market, the key is to wait for the breakout. That means waiting for the price to break above resistance or below support with conviction and volume. For Bitcoin, that means waiting for a clear break above $91,000 or a break below $84,000. If we get a break above $91,000 with strong volume, it could be a sign that the next leg up is starting. And you can look to go long with a target of $99,000 or even $110,000. The classic pivot R3 level is at $110,330, which could be a realistic target if we get a strong breakout. If we get a break below $84,000, it could be a sign that the bears are back in control, and you can look to go short with a target of $78,000 or even $67,000. But remember, patience is key for a swing trader. Don't jump the gun. Wait for confirmation. A false breakout can be a killer. So wait for a clear break with a daily close above or below the key level, and then enter the trade with a clear plan and a clear stop loss. I recommend using the 4-hour or daily time frame for your analysis and looking for confluence with other indicators like volume and the MACD. For the long-term trader, the hodler, you're not worried about the short-term noise. You're in it for the long haul. You believe in the technology and you're willing to ride out the volatility. And in a consolidation market, the key is to accumulate. That means buying the dips and adding to your position over time using a dollar cost averaging strategy. For Bitcoin, that means looking for buying opportunities whenever the price dips below $90,000. You're not trying to time the market perfectly. You're just trying to build a position at a good average price. And you're not worried about the short-term fluctuations. You're focused on the long-term potential. And with analysts from Bernstein maintaining a $150,000 target for Bitcoin in 2026 with a $200,000 peak projected for 2027, and some supercycle models suggesting Bitcoin could reach $230,000 by mid-2026. There's a lot to be optimistic about it. But remember, even as a long-term trader, it's important to have a plan. Don't just buy and hold blindly. Have a clear thesis for why you're investing in a particular coin, and be prepared to sell if that thesis changes. And always do your own research. Now, before you go out and start trading, there's one more thing we need to talk about, and that's the global X factor. Because as we all know, the crypto market doesn't exist in a vacuum. It's influenced by a whole host of global events, from central bank decisions to geopolitical tensions. And right now, there are a few key events that you need to have on your radar. First up, we have the Federal Reserve. The Fed is meeting today, January 28th, and while they're expected to keep interest rates on hold at 3.5% to 3.75%, their guidance on inflation and future rate cuts will be crucial. There's a 97% probability that the Fed will hold rates steady, according to CME Group data. But what's more important is what Fed Chair Jerome Powell says about the future path of rates. A dovish tone from the Fed could be bullish for crypto, while a hawkish tone could be bearish. So keep a close eye on what Powell has to say. The Fed cut rates 3 times in the second half of 2025, and at the December meeting, officials projected just 1 rate cut in 2026. The next rate cut is expected no sooner than June 2026. This means we're likely to be in a higher for longer interest rate environment, which could put some pressure on risk assets like crypto. But on the flip side, the US dollar has been weakening, with the dollar index hitting a 4-year low at around 95.5. A weaker dollar is generally bullish for crypto, as it lowers the opportunity cost of holding non-yielding assets like Bitcoin. Next, we have the upcoming changes at the Federal Reserve itself. President Trump is expected to name his pick for Powell's successor to lead the central bank in the coming days. The leading candidates include Fed Governor Kevin Walsh, Fed Governor Chris Waller, and BlackRock's Rick Rieder. All of these candidates have expressed support for further rate cuts. So a change in leadership could be bullish for crypto, but there's also uncertainty around Fed independence, with the Supreme Court hearing arguments on Trump's attempt to remove Fed Governor Lisa Cook and a DOJ criminal investigation into Fed Chair Powell being disclosed. This uncertainty could create some volatility in the markets. And then we have the ongoing push for crypto regulation. The Senate is currently working on a crypto market structure bill, which could bring much-needed clarity to the industry. The Genius Act passed in mid-2025, and there's been significant regulatory progress since then. The Trump administration has been relatively friendly to crypto, with the establishment of a strategic Bitcoin reserve to manage the US's crypto assets seized via criminal or civil asset forfeiture. At Davos 2026, White House advisor Patrick Witt described the event as a turning point for global crypto normalization. This is all very bullish for the long-term adoption of crypto. But in the short term, there's also the risk of a government shutdown. There's an 80% probability of a shutdown, according to some estimates, which could create a data fog for the Fed and add uncertainty to the markets. This is something to keep an eye on. Finally, we have the Magnificent Seven earnings coming out this week. These are the big tech companies, Apple, Microsoft, Google, Amazon, Meta, Nvidia, and Tesla, that have been driving the stock market higher. Their earnings could have a spillover effect on crypto as they influence overall risk sentiment in the markets. If the Mag 7 reports strong earnings, it could be bullish for risk assets, including crypto. If they disappoint, it could lead to a risk-off move. So as you can see, there are a lot of moving parts. And it's important to stay informed because in the world of crypto, knowledge is power. And that, my friends, is how you trade the current crypto market. It's a consolidation market, a range-bound market, a market that's coiling up for its next big move. And now you have the strategies to trade it, whether you're a short-term scalper, a mid-term swing trader, or a long-term hodler. Let me give you a quick summary of the key technical triggers to watch. For the bulls, a break above $91,000 with strong volume would be a buy signal, with targets at $99,000 and $110,000. For the bears, a break below $84,000 would be a sell signal, with targets at $78,000 and $67,000. For range traders, buy at $84,000 to $86,000 support and sell at $91,000 resistance. And for long-term investors, accumulate on dips below $90,000 using dollar cost averaging. But remember, this is not financial advice. This is just my analysis of the market based on the data we've looked at today. Always do your own research and never invest more than you can afford to lose. The crypto market is a wild and wonderful place, but it's also a risky one. So trade smart, trade safe, and I'll see you in the next one. If you found this video helpful, please hit that like button, subscribe to the channel, and ring that notification bell so you don't miss any of my future videos. And drop a comment below letting me know what you think about the current market. Are you bullish or bearish? What's your trading strategy? I love hearing from you guys. This is Boni signing off. Stay profitable, stay safe, and I'll catch you on the next one.